It is Monday, February 2nd, 2026, and the market is currently open. BigBear.ai Holdings Inc., trading under the ticker BBAI, is currently priced at $4.92 as of 10:09 a.m. Eastern Time. This represents an intraday decline of 2.48% from the previous close of $5.04. While the headline figure shows a pullback, the underlying data reveals a surprising divergence that most casual observers are missing. Despite the red on the screen today, institutional accumulation in BBAI has actually accelerated over the last 3 months, with major players like Vanguard and UBS Group significantly increasing their positions, even as the share price remains 50% below its 52-week high of $10.36. This creates a fascinating tension between the retail fear of a penny stock trap and the quiet, calculated positioning of the smart money that appears to be betting on a long-term structural shift in how the company services the Department of Defense. The common market narrative around BigBear.ai is that it is a struggling second-tier AI firm that lives in the shadow of Palantir. Investors often point to its heavy reliance on government contracts and stagnant revenue growth as evidence of a failing business model. The popular belief is that the company is stuck in a cycle of dilution, especially after management recently moved to double the authorized share count from 500 million to 1 billion. This has fueled a wave of skepticism on investor forums, where the prevailing sentiment is that the stock is a avoid-at-all-costs candidate due to potential shareholder wipeouts. However, a deeper look at the price action and volume patterns suggests this bear thesis might be missing a critical evolution. While the narrative is focused on dilution, the reality is that BBAI has been aggressively cleaning up its balance sheet. The full conversion of its 6.00% convertible senior secured notes due 2029 in January was a major step in debt reduction that the market has yet to fully price in. Furthermore, the volume spike seen in late January, where over 100 million shares changed hands in a single session, indicates that the stock is undergoing a massive handoff from weak retail hands to more disciplined institutional desks. The sector-wide momentum in AI software is shifting from speculative hype to mission-critical infrastructure, and BigBear's recent overseas wins in the UAE and its acquisition of CargoSeer suggests it is finally finding a way to diversify its revenue streams outside of traditional U.S. federal budgets. Trading volume today is relatively steady at 6.4 million shares against an average of roughly 80 million, suggesting that today's dip is a low-conviction move rather than a fundamental breakdown. Broader macroeconomic forces are currently weighing on the small-cap tech sector, as interest rate expectations remain a primary driver of volatility for companies that are not yet consistently profitable on a GAAP basis. We are seeing a wait-and-see approach from the market ahead of the upcoming proxy vote on February 18th, which is the next major catalyst. Short-selling awareness is non-negotiable when discussing BBAI. As of the most recent exchange data from mid-January, the short interest stands at a staggering 102 million shares, representing 24%.
BigBear.ai primarily operates as a provider of AI-powered decision support platforms with a focus on national security, supply chain management, and autonomous systems. Their TrueFace facial recognition software is a core asset, boasting high accuracy rates for border security and airport deployments. The company's business model is shifting toward a more scalable SaaS-like approach through products like Ask Sage, which is projected to grow significantly in 2026. Historically, the stock has been a battleground ticker, characterized by extreme volatility and high beta, making it a favorite for day traders but a headache for long-term holders. Retail sentiment on platforms like Reddit and X is currently split. In subreddits like Squeeze Plays and Penny Stocks Watch, there is ongoing debate about whether BBAI is a bull trap or a breakout candidate for the first quarter of the year. There are frequent calls for regulatory transparency regarding the dark pool volume, which some retail traders believe is being used to suppress the price despite positive news. It is important to remember that while retail coordination can create short-term price spikes, it rarely dictates the long-term fundamental trajectory of a multi-billion-dollar company. Looking forward, there are several possible scenarios for BBAI. In a bullish outcome, the company secures the shareholder vote to increase its share count, successfully using that capital to acquire high-margin commercial AI firms and diversifying away from government reliance. This could lead to a re-rating of the stock's multiple, bringing it closer to the valuation seen by its peers. Conversely, a bearish scenario involves the vote failing, or the new acquisitions failing to integrate, leading to further margin erosion and a possible test of the 52-week lows. The primary risk remains the potential for significant dilution if management issues a large block of shares at current prices to fund operations. The upcoming earnings report in March will be the definitive reality check for these competing theories. If Big Bear can show that their UAE strategy and the 𝐃𝐈𝐒𝐂𝐋 integration are contributing to top-line growth without sacrificing margins, the short thesis could quickly fall apart. Investors should watch for any updates on the Ask Sage annual recurring revenue, as a six-fold increase in that segment would be a powerful signal of commercial viability. In summary, BigBear.ai is a company in the midst of a high-stakes identity shift. The intraday price of $4.92 reflects the market's current uncertainty and the weight of a heavy short interest. However, the expectations of a failing government contractor are increasingly being challenged by the reality of a cleaned-up balance sheet and strategic international expansion. The gap between what investors think they know and what the institutional data shows is widening. Whether this leads to a sustained recovery or another round of pain for holders depends almost entirely on the execution of the acquisition strategy over the next 2 quarters. What's your take on the rising short interest? Do you think the bears have a legitimate point about the margin pressure, or is the institutional buying the more reliable signal here? The tension in the charts is palpable, and as we head toward the mid-month proxy vote, the volatility is only likely to increase. Would you like me to further analyze the specific institutional flow for BBAI or compare its recent acquisition multiples to sector averages if that would help clarify your strategy? Would you like me to do that?